sharp up move coming through. Rahul, Veera from Nippon India AIF is with us now to take us through what he's making of things. Rahul, good to have you with us here. Thanks very much. What are you eyeing, Rahul, at the AIF, at the fund? I mean, where are the opportunities?
We believe that overall at this point of time between the large caps versus mid caps, there is some valuation gap between the large cap and mid cap, but given the 1 year or 2 year, mid caps will relatively be better in terms of the absolute alpha or the outperformance versus the large caps. So across, whether it's banking sector or the IT sector, we've seen that the large caps in terms of their outcomes versus the expectations is relatively weaker. Whether it's bank or IT, you will see slightly better returns in the mid caps across banking or IT names.
So you want to just quickly, Rahul, tell us any big changes that you've made to your portfolio in the last 1 month? Any thoughts on IT and the way we've kickstarted the earnings season?
So in IT, we continue to remain a little bit on the mid-capish side. And we might take some contra calls on the ENRD space overall, which have not performed well. But we are seeing some slightly green shoots in that space. Probably some of the names that we have historically been ignored in the last 1.5 years could give some decent alpha over 1 to 3 years now.
So ER&D space, particularly auto, or it would be across, tell us a little bit more about the thinking and what are the green shoots that you're seeing?
We are seeing some positive commentary coming out on the lower base side. So some of these companies that have global companies, right, which have commented slight positive on the ER&D expenditure. So probably this will be the green shoot that we are looking at this point of time. The company's numbers that will be reporting on the domestic side will take some time to show that. But in terms of valuations, they are closer to the bottom now.
Okay, so that's a take on IT companies. Rahul, hi, good to have you on this afternoon. What's your stance on FMCG? Because the market is now building on this hope that maybe we're past the worst. And even if volumes pick up a little bit from here, maybe that could result in stock price appreciation. Your thoughts?
Again, we are playing a similar thesis in terms of between the large caps and the mid cap. On the consumer discretionary spend, we are focusing on more of niche consumer discretionary names there. Large staples will see some revival. Volume growth is going to come back across a few names given the low base last year. Plus all the macro indicators, right? Whether it was your salary transfer, taxation, all the other data points that we are aware, good rural monsoon. So some kind of indicators are there, but on a low base, they'll do better. But in terms of pure alpha generation, we prefer to be on the mid-cap names.
Yeah, got that. I just want to take a quick look at some of the other movers, right, which are coming through. BSC is down another 3.6, 3.5%, right? So actually, just look at this week. This week, it's down 10%. That is Bombay Stock Exchange. And from the highs, the high was made, it was, I think, on Monday morning, right? The news came, that SEBI order came, that was last Friday, Friday morning. The high is about 3,030, and the stock is about not 1,000 rupees, but less than 1,000 rupees, 2380 or so on BSC at this point in time. IREDA is another one. We spoke with the management earlier. IREDA, by the way, is down 5.5%, and it's the third largest volume-led loser right now on the NSE. There is MCX, which is another one, which is down about 3.5%. I think for the week, it's down again 10%. So it's not a great week for exchanges. And MCX, by the way, is, of course, the monopoly business as far as commodities is concerned. CDSL, Amber, Elecon, Hitachi India, BEML. Actually, I can spot at least 12, 13 very large volume-led losers coming through today. Unlike what we've seen over the last couple of days or so. There's more HUL information flashing at the bottom of the screen. On the screen, this is a CNBC-TV18 exclusive. The current CFO of HUL, as our colleague Shilpa will tell us, and she'll join us in just a bit, is also likely to step down and is likely to be moved to a global role. This is what we're picking up. We will put out the HUL statement as well We wrote to them, and I think that we've got a response which will be put out as part of the graphics in a bit. So Ritesh Tiwari likely to step down as HUL CFO to be moved to a global role. This, of course, comes after Mr. Rohit Java, the CEO and MD, stepped away from that position as well. So looks like at the top level, I mean, there are changes and maybe a new team which is being brought in with a new sort of boss right at the top coming through as well. I don't know, Rahul, if you have any thoughts, and as I said, Shilpa will join us with the story in a bit, but in the meanwhile, any specific thoughts on this development? If you don't want to talk about Lever per se and what this means for Lever, it's a giant, tough environment, in that sense, a new boss. How do you view that as an investor?
So management change, and that too when you see the background of the new MD, right, in terms of the kind of achievements that they've been able to get, the kind of aggression that they've been able to get, there is some kind of a hope that gets built in. So that is what we are seeing, the reflection in terms of the built-in expectations from the investor community at this point of time. But again, as I said, in terms of what we are paying for the same staple companies at 45-55p, it's a little bit challenging for us to take calls on these at this point of time.
Hi Rahul, good afternoon, good to see you. And how are you all placed on pharma? Glenmark Pharma, out of nowhere, there's this big news that's come in there. The stock already rallied 20% in 1 month. It's put on another 15%. The street is optimistic. One would wonder whether or not it's making a near-term peak. But what's your view on the pharma space? What are the opportunities you all have identified?
See, between the pharma space, we are avoiding the larger generic names. CDMOs or domestic pharma names are the relative better ones at this point of time. Again, pharma as a space continuously remains a pure bottom-up stock picking game. Now, the event that we saw today for one of the names that we just discussed, such kind of events will always create a new trajectory for the company and help in the medium term. But on the generic versus CDMO versus the domestic, we are preferring the CDMO and the generic space.
Rahul, so ER&D could be a potential contra call. Anything else where valuations are looking attractive and growth will soon follow?
Right. So at this point of time, whether it's cement, chemicals, and a little bit of discretionary consumption, this is what we are looking at this point of time. We believe there will be a reversal in terms of volumes, pricing across both cement and chemical as well. So there is a kind of an expectation that is not yet built in. So we see some kind of upgrades that will come through in the cement as well as the chemical names.
Okay. All right. We will wind it up on that note. Thank you very much for being with us, Rahul. Wish you a good weekend, and we look forward to more conversations.